The purpose of Wealth Talk is to educate, inform, and hopefully entertain you on the subject of building your wealth. WealthBuilders recommends you should always take independent financial, tax, or legal advice before making any decisions around your finances.
Welcome to episode 80 of Wealth Talk. My name's Christian Rodwell, the Membership Director for Wealth Builders, and I'm joined today by our founder, Mr. Kevin Whelan. Hi, Kevin.
Hello, Chris. Good to be with you again today.
Yes, and we're still in troubled times. It seems that these times are just never ending at the moment. And we're speaking to members every day, Kevin, and they're asking us different questions about what they should be doing with their money and their investments. So we're looking today at the topic of gold, which is, I guess, an alternative investment and referred to as an asset often, Kevin, but in Wealth Builders world, technically not.
Yeah, it's an interesting one. I mean, if you're an economist, you often refer to precious metals and commodities as an asset class. So from that point of view, it's known as an asset. But if we kind of reflect on what do we think in Wealth Builders as the definition of an asset, and I think we probably gave this in definition way back in early episodes of Wealth Talk, Chris. But an asset is something you own that is not you. It puts money in your bank account while you're asleep. Okay, so can you own gold? Yes. Does gold put money in your bank account while you're asleep? Well, it doesn't, because gold doesn't have a natural flow of income. So we must acknowledge then, as true wealth builders together, that gold is not an asset, it's a hedge. It's a way to park money where you are investing really in the stored value of gold, because gold, with its historical connection, you're going back as far as you can imagine when humans first sort of traded in anything precious. Gold has had that store of value, and because it's so rare, it maintains a store of value. So that's what you're buying into if you buy gold. And we don't make any recommendations of what people should buy, hold, or invest in. But gold is a hedge. So it's definitely worthwhile chatting about hedges, because when times are troubled, most people hedge their money in cash. And cash has got all sorts of complexities. One is banking risk. If you leave all your money in the bank, what if the bank goes bust? We've seen that almost happen, and certainly some banks have gone. You've also got, interest rates are low, threat of negative interest rates, so almost getting zero on your money. Maybe even back in the Wild West days, Chris, when you had to pay to store your money. That could happen, theoretically. Don't think it will, but it could. That would be a negative interest rate. So gold is an interesting one, because you can buy gold in relative small quantities. So it's a nice, easy hedge. And it also has a fascinating appeal, whether it's in coined form, Krugerrands and so on, or in jewelry form, very popular in certain cultures, of course, or whether it's in bullion. And I'll spend more time, Chris, after we hear from Giles Maber, very good guy, established guy in working with the company. Well, I mean, there's history for his company, Sharps Pixley, going back to the 1700s, Chris, isn't it?
Yes, that's right. It was actually the merge of two separate companies, Sharps Wilkins, which was formed in 1740, and then Pixley and Abel, which was founded in 1852. And they merged in 1957 to form Sharps Pixley, and very, very traditional, established and well-respected companies. Yeah,
very nice. And I've been to the Sharps Pixley offices and showroom, which is in Piccadilly, just down from Piccadilly Circus, and they've got a vault down there. You know what, Chris? It's a very nice feeling to go down in a vault and have a little stroke on a kilogram bar of gold. I tell you what, it's definitely very uplifting.
I can imagine it is. I tell you what is also uplifting, Kevin, when we have lovely reviews, and we've had a really, really good one again this week, which I'll pull out the one from Z Razak. So Z, if you're listening, thank you so much. And let me read this out. So Z has written on Google, actually. So Google reviews is another place, really easy. You can find us. And if you've had some interaction or enjoyed listening to the podcast, drop us a review there. But he said, Kevin and the team are great at what they do. They also go out of their way to help people who desire to create sustainable wealth through education via amazing content and training. I would highly recommend Kevin. If you're fortunate to have a conversation with him, make sure you tap into his vast knowledge, which is second to none. I think the difference with Kevin and the team is they do care and get a buzz out of helping people.
Wow. Very nice. Blushing, in fact. He's a very smart guy, very credible accountant, tax specialist, so very used to giving guidance himself. So it's quite humbling that somebody who's busy and a professional takes time to acknowledge us. And I would say this, Chris, this is episode number 80 in our podcast. And one of the things we often say, but I don't think we press, and I want to press the flesh a little bit, you listeners out there. Chris and I do this, and we either talking side by side or we're talking to ourselves socially distanced in computers in different rooms in different offices on different days. But we're giving of ourselves. We genuinely are trying to help. We want as many people to be wealthy as possible, irrespective of whether you favor us with any monetary value. We want to give you some intellectual value back. But, many of you are listening, but not participating, and telling us. So why don't you take a minute, sometime in the next 10 minutes after you've listened to this podcast, if you kind of like any of the podcast, just post a review. Just say, loving it. Or just something that takes no more than 30 seconds of your time. Because it's a gift, We get a buzz, and Z's absolutely right. We get a buzz when we help people. But sometimes the people who are helpers, like us, Chris, we need to be acknowledged too. Not in a kind of self-serving, aren't we good, and pat each other on the back kind of way. But are we on the right track here, guys? Are we saying the right things? So if you're liking anything that we're doing, if you like how we're interacting, if you're liking the message that we are getting out there, either tell us or tell somebody else. But tell us, just say, hey, doing a good job, guys, keep going. Or if you don't like it, don't tell us that way. Send us a message and saying, well, you could do this or you could do that. Because we will respond if you will take 1 minute of your time. And that's all I'm asking for in this episode. I think we often will say, if you're enjoying it, post a review. But we don't get as many as we think we should. So I'm reaching out to you personally. If you're listening one-to-one now, please, 30 seconds, 1 minute. Can you give us that? Just to acknowledge us and say, keep going, guys, loving it. Or, hey, it would be great to hear from you about this. And then we'll pick that up and we'll reflect on that. Anyway, enough of that, Chris. Why don't we zoom on over and have a listen to what you and Giles had to say about gold.
Okay, right. Let's head on over and listen to the conversation with Giles Maber from Sharps Pixley. Giles, welcome to Wealth Talk today.
Hi, Christian. Thanks very much for having me on.
No, very good to have you. Now, would you mind just giving our listeners a bit of a background as to yourself and to your company, Sharps Pixley?
Yes, certainly. I've worked for Sharps Pixley for 4 years now. My background before that was working in corporate finance for an investment house called Baker Steel Resources. And they actually invested in very early stage development mining projects worldwide, including some precious metal projects. But I wanted to get out from behind the sort of financial valuation methodologies and focus on something a bit more client facing. So this position became available at Sharps Pixley in the precious metal sector. So I thought, why not let's move to the other end of the spectrum and help people invest in something more solid.
So for anyone who hasn't dealt with a bullion dealer before, give us a bit of an understanding as to how it works.
Sure. So, firstly, clients come to us and really there's no investment minimums or maximums. We look after, clients who are looking to invest, £10,000 or clients who are looking to invest, family offices who are looking to invest sort of upwards to £20 million. Clients reach out generally to us. And I think the thing that makes Sharps Pixley unique is obviously our physical presence in London. We're very much of an old-fashioned mindset, if you like. We put sort of customer service and face-to-face meetings at the forefront of what we do here, rather than just trying to encourage everyone to use our online shop. We encourage people to meet us and to come form a relationship.
And Gold is an unregulated asset class. So what's some of the governance around in that industry, Giles?
Sure. I mean, I think, luckily I work for a company which has a name in precious metals for over 200 years now. So we have a reputation and we take that very seriously and a bit of heritage there as well. But mainly, it's called the London Bullion Market Association. Now, this is the industry body which governs what we do, but it governs the whole market. So it really looks into the practices and manufacturing techniques of all the refiners globally as well, to ensure that the gold is of the highest purity. So Sharps Pixley only offer our clients gold bars from, it's called an LBMA accredited good delivery refinery, which can be abbreviated as to GDL. So if clients are looking to buy a gold bar, ensure it's from an LBMA accredited refinery.
Okay, so let's start looking now at some of the things that makes gold such a strategic asset, Giles.
Sure. I mean, I think firstly, gold is relatively scarce. We all know that. I mean, if you look at the global mine production each year on gold is about 3,400 tons. This has only increased by about 1.6% year on year for sort of the last 50 years. So the supply of gold is scarce, firstly. The demand for gold is ever growing, particularly on the investment side. I think that's really down to emerging markets. Obviously, we're thinking of China here, who are now a huge consumer of investment gold. And with those developing markets, in good times, there's also a lot of people buying jewelry. That's usually the sign of a buoyant economy. People have a little bit more money to spend on jewelry. And India, of course, they buy jewelry as an investment form for them of gold. And you can always tell how productive the agricultural, the farming season's been in India, because all the rural population travel into the cities and buy a lot of gold if they've had a good season. So, I mean, we've covered there's a luxury good. We've covered there's got a scarce supply. Obviously, it's used in technology as well, so there's demand for it there. And of course, it's used as a sort of a hedge against market uncertainty and systemic risk. For us here at this company, that's what we do. And there's gold has always had a history of preserving its wealth over time. Fiat currencies debase over time, and we're seeing that more prevalent than right now. But everyone's heard the sort of the anecdote that an ounce of gold in sort of Roman times would buy you a suit of armor, and it's still just about buys you a suit on Savile Row here in London, if you're lucky.
Yeah. So I actually put a post in the Wealth Builders Facebook community last week, Giles, to let people know that I was speaking with you, and we had a few questions, and I just want to dip into a couple of those now, actually. And the first one was from Dave Ford, and Dave was asking why the stock market has been dropping recently, and there's been a corresponding drop in the gold price, and in times of uncertainty, he would expect a proportional rise in the price of gold.
Yeah, I mean, he's absolutely right. And this is a question which a lot of our clients have been asking us recently. I think, this probably started more in March and then the beginning of April, when we saw, an all-encompassing mass market liquidation. Everything plummeted as obviously we entered lockdown, and there was huge uncertainty in the economy. And why gold also, started selling off is ultimately that, if you consider there are a lot of portfolio fund managers out there who have equity positions, and when those equities decrease and fall very swiftly, they get margin calls. And then the fund managers look at what's their most liquid, profitable position that they can sell off and to cover those margin calls. And that's when they think that these positions are going to recover quite quickly. Now, we saw an awful lot of that at the end of March. And suddenly the gold price was down at $1,450, having been up at $1,900. So that's really what drove all markets in the same direction. And then we had this sort of V-shaped recovery as, of course, we saw these mass fiscal and monetary packages being released to try and combat COVID. So that suddenly brought everything up in the same direction at the same time again. But more broadly, what I would just ask your listeners and your members to consider is to try and avoid looking at sort of short-term movements and focus on longer-term trends. Now, what I mean by that, and I'd happily send it to anyone and perhaps to David as well, is some research that Bloomberg, or the data which Bloomberg brought out, looked back at the correlation between gold, US equities, international equities over the last 20 years. So this is actually quite of the moment. It was published just at the end of September. And the correlation over the last 20 years for gold to US equity is actually 0.05. So that shows that gold is doing its job as a diversifier. And, apart from this short-term period, and perhaps it's also due to sort of reflationary times right now as well. I think, that comes with what I mentioned about the monetary and fiscal stimulus. But, right now, countries are doing whatever they can to try and sort of dig ourselves out of this hole.
And we are just a couple of weeks away from the US election, which is another kind of hot topic, right? How's this going to affect gold?
Yeah, I mean, it's the most pressing question right now. Clients are clamoring as to which result's going to yield the biggest increase in the gold price. And I think that, it's interesting, isn't it? I mean, Trump obviously has been good for gold prices over the last few years. Let's not forget that he almost started a war with Iran, and of course, his sort of ongoing war with China, slightly different themes. But Biden, for me, and if you look at a lot of analyst reports as well, they'll sort of hopefully support what I'm saying. Biden's promised such mass fiscal spending over his term. He's throwing a figure of something like $9 trillion around, which, of course, people do throw these figures into thin air. But I think that the scale of the stimulus package that we see will be greater immediately after the election if Biden wins than if Trump does. So I believe that will only increase what we're seeing with this recovery. I don't think it'll be sustainable in the long run. Whether it'll be 6 or 12 months, who knows? But I think in the short term, all asset prices will rise considerably. So I think that Biden will be better for gold in the short term than Trump, than a Trump victory.
And are there any other factors that you think can contribute over, when we look at 2021 in terms of the price of gold?
Well, I mean, I think, what do investors look for when they're investing in gold? They're looking at, interest rates. That's been the main driver for gold over the last few years. And, we are now in a period of sustained low interest rate. If you look at inflation, the ECB has their target of 2%. I think we're a little bit above that at the moment. And then you've got, the interest rate at the moment at 0.1. Now, what that means essentially is that you've got a negative real rate. Now, this is interest rates adjusted for inflation. So if you've got a £10,000 saving in your bank account, in your savings account, you're essentially losing 2% of that per year at the moment. Now, that is the most strong driver for gold prices that you'll see. Now, the opportunity cost of holding your money in the bank is obviously significantly less, and not only that, but bond yields are significantly lower than they have been as well. So when you're looking for an efficient diversifier over the next, I'd probably say 3, 4, 5 years, I don't think you need to look much further than gold. I mean, if we look at just talking about interest and debt, particularly in the US, I think their fiscal interest payment at the end of September for the year was $522 billion. Now, that's only going to continue growing. And if you throw in their spending on defense as well, you're already at 1.4 trillion. So if interest rates do start increasing, then it's just hard to imagine how they're going to stop this sort of stimulus and printing, increasing the money supply exponentially.
So I'm going to come back to a couple of other questions that we've had posted in our Facebook group, Giles. And next one's from Jeff Sturtevant. Jeff's asking, is it true that bullion vaults work on a fractional reserve principle like the banks do with money, where the gold you buy and own is actually resold to another buyer, working on the principle that all gold owners would not ask for the delivery of their gold at the same time?
Okay. Well, thanks, Jeff. It's a question. It's a good question. This is probably a question which no one knows the actual truthful answer to. Look, here at Sharps Pixley, we only offer clients allocated and individually segregated metal. Now, we also offer you inspection rights, so you can come and audit. You can hold your own bars, take pictures with them, do whatever you like. That metal is yours. It's here. So there is no counterparty risk, if you like, for you when you invest in Sharps Pixley. Going back to the larger banks, there are a lot of conspiracy theories, last year I think I read a piece of research which said something like for every ounce which was supposedly backing an ETF, it was also lent to about another 8 ETF holdings. So not all ETFs are the same. I can't state that strongly enough. I think picking the correct one is, of course, important. But I think gold should be considered as the ultimate hedge against systemic risk and market collapse. And with that being the case, the old adage that whoever holds the gold makes the rules will always ring true. Right? So we're offering, and you have the option to do this with anyone else as well. But please do consider owning some physical gold because if you can't touch it, you don't really own it.
Mm. And how does it work with kind of insuring that and the vaulting aspect, Charles?
Sure. All of our holdings are fully insured. We are underwritten by Lloyd's of London. So that's one of the questions which clients ask. So, what happens if your underwriters collapse? We use the biggest and the best, and if Lloyd's of London collapse, then the world's really going to be a darker place. So we offer vaulting and insurance from 0.3% per annum, and that's inclusive of VAT, which is a very reasonable and competitive rate, we feel.
Mm-hmm. Okay, another question is from Stephen Hall this time, and he's asking a question that's probably very relevant for our listeners, and this is how to invest in gold via a SSAS pension. So what products can be held specifically, Giles?
So according to HMRC rules, clients can only hold gold bars of a purity greater than 995, which for us, we only offer you bars which are 99.99% pure gold. And as I said, from the accredited LBMA good delivery refineries. So it's very straightforward. We have an application form which clients, trustees complete with their pension providers or their scheme provider, I should say, and return it to us. The account can be opened within 24 hours usually. And then clients also have an online portal access where they can sort of review and also manage their accounts. So if they want to buy more, sell more, they can do so all from online. But I'd always encourage clients to give me a ring and do things over the phone. Voice execution usually yields a slightly better price.
Mm. So I guess finally, Giles, is there anything that our listeners should be kind of looking out for when they're thinking about investing in gold? And obviously, another comment actually within the Facebook group was there are some potentially dubious schemes that you see out there. And, how do you do the due diligence? Obviously, working with someone reputable like yourself that's got the trust and the background that you do have. Any kind of other tips for people just to make sure they avoid any costly mistakes?
I think that's it. I think that reputation counts for a lot, certainly in my book, and I hope for everyone else's. Our clients and hopefully your members are considering investing an awful lot of their hard-earned funds. They They want to make sure that it's safe, and I always encourage people to have a good relationship with the outfit that they choose. For me, I don't think it's right that generally clients commit to large investments over the phone. I would always encourage you to come and visit us. Of course, that's been made more difficult this year due to COVID, but thank goodness for Zoom and other providers, of course. I think that you just need to feel safe and trust the outfit who you choose to use. I think obviously nowadays there's a review on every company out there. The customer service is absolutely crucial. The things you need to look out for, as I've mentioned, are that you're buying gold from a reputable refinery, and that you can always sell it back to them. We offer clients, one of our unique selling points, if you like, is that we offer a buyback guarantee on metal we've sold, and we'll always buy it back. And it's incredibly liquid. If a client phones me and says, Charles, I want to sell a kilo of gold, within 10 minutes we'll have instructed a bank transfer back to his account, and the funds, if it's a UK account, will arrive within the hour usually. So it's incredibly quick and liquid. Mm-hmm. I think that goes back to sort of talking about counterparties. You want to make sure you're using a firm who have got the financial resources, even in times of significant market stress. And what I mean by that is, let's say we do see gold prices rally next year, and suddenly people decide that the world's looking great and the economic outlook is suddenly favorable, and there's a lot of selling, for gold. You want to make sure that you're using a company who can manage the liquidation process without delay. And for us, Charles Pixley, we are actually owned and part of the Degussa Group, which is Europe's biggest precious metals retailer, dealer. And that gives us institutional scale, service, support and pricing, which we can pass on to our clients. And I think that it's really important to delve into the background of the company that you're investing with.
Charles, thank you very much for sharing with us on Wealth Talk today.
Pleasure. Thanks, Christian.
So Giles talked about holding gold as a hedge there, Kevin. What are some of the benefits of that?
Well, the important thing when you're building wealth is, by diversification. So you're building wealth in multiple pillars. But also in troubled times, you might want to keep more of your assets in a liquid or semi-liquid form. In other words, easily realizable from the format it's in into cash to enable you to reinvest or build other assets that you want to in business, property, joint ventures, and so on. So, gold has long been established as a place of storing value, as well as other precious metals. But certainly gold would probably be the most popular one. And so therefore it's important to kind of understand how gold works. And one of the best ways to hold gold, in my view, Chris, is to hold it in your pension. And particularly, you can't hold gold in normal pensions, personal pension that you've got, or a work pension, because they're not designed for that. They're only designed for the stock market, which is why we believe there's, better alternatives to that. And one of those alternatives, which we hear a lot within our community, Chris, isn't it, is in the SSAS, that small self-administered scheme that allows you to take control of your pension, and therefore you can invest in whatever assets, whatever things you want to, recognizing that we're not saying gold is an asset because there's no income stream. But definitely a great way to hold gold is to hold it in a SSAS.
Yeah, so what are some of the benefits? Because we've heard on several occasions some of our members who perhaps they're in between projects and they've got cash in their SSAS and they kind of want to put it to work. Instead of having it in cash, would you recommend perhaps having some of that in gold? Are there pros and cons to that?
Well, look, Chris, there are pros and cons to anything. And let's be clear, we never recommend, right? We say at the very beginning of the podcast, our role is to educate, to inform, and to entertain. It's not to give advice. But I'm saying everybody should have a rich and diversified portfolio of assets. And if gold appeals to you, then a few of the reasons actually why holding gold inside your SAS pension would be useful. Well, first of all, if you think about it, if you put money into a pension, you get tax relief on it. So if you're paying money personally, let's say, and you're a 40% taxpayer, and you pay whatever you pay into your pension, you've got 40% tax relief. Well, if you then go and buy gold, what have you just done? You bought gold at a 40% discount. Well, what's wrong with that? That's not a bad thing, is it? The next thing, of course, any growth is completely tax-free. So there's no income tax, there's no corporation tax, there's no capital gains tax, and there's no inheritance tax. However, the thing to bear in mind about owning gold, you heard Giles talk about different ways gold can be owned and stored, jewellery, as he mentioned, coins and bullion. The only way you can hold gold in a pension is to hold it in bullion format. So there's a few technicalities there. Did you hear him talk about the quality of gold? There's always fancy language, but the quality of gold needs to be a certain standard, which is 995, which is 995 out of 1,000, which means virtually pure gold. And it needs to be in bullion or bars format. And you can't take the delivery of the bars to your home, but you need to have those bars stored. And Sharps Pixley just happen to be a place where you can store your gold. You can also store gold at the Royal Mint, so there's lots of places you can store your gold. So you can inspect it, you can touch it, feel it, and so forth, but you just can't take it home. But that's lots of good reasons to hold money. And the other thing that's interesting about gold is because it's so acknowledged as a store of value, you might have heard him refer to the ability to buy and sell gold. Well, whenever you're buying and selling anything, there has to be a market for it. So if anybody wants to sell gold, for whatever reason they'd want to sell gold, then, of course, there is a market for that. And any good bullion dealer will be able to sell your gold virtually instantly. So while it's not as liquid as cash or as liquid as a tracker fund, there's a process for it. It's pretty quick. So, you can capture your value quickly and you can exit from that value relatively quickly. So, if you like gold, no reason at all why you couldn't think about holding gold inside your pension.
One of the things that holds people back from building wealth, we've talked about overwhelm, lack of time on last week's episode. The other thing is the fear of making mistakes, risk. And the importance of doing your due diligence on any investment is obviously critical. And we talked about that with Giles. And also just having that relationship, taking time, not rushing into things.
Well, it's incredibly important, Chris, with all assets. It's the fourth part of the wheel of wealth, isn't it? Due diligence. So you need to buy gold from your reputable dealer if you're going to buy gold. And there are many of those. We're not annexed to any of them, but, we like Sharps Pixley. They're very willing people to show people around, to get them an experience of seeing what gold looks like, feels like, prices of things. And as you've heard from Giles, he treasures the relationship. Now, you don't need to. There's plenty of places you can buy gold online, but just check out the reputation and make sure you're buying, you're actually buying bullion, you're not buying a hope. There's other ways to buy gold, by the way. You can buy gold ETFs. You're not buying the actual asset, but shares in companies that manufacture or process gold, or mine gold. So there are ways to buy gold in different assets. Certainly through the stock market or through funds or ETFs, exchange traded funds. So I would just put this in your pipe, have a smoke of it, see if you think gold is worthwhile. And one thing also to talk about, Chris, just very briefly, I'll mention it, is he talked about why people want to store gold in what he called fiat currency. Do you remember he said fiat currency? Yeah. So it's not an old Italian car. It just basically means currencies that are not backed by anything. So in the old days, you may or may not know, Chris, that up until the 70s, all notes and coins in circulation were backed by the amount of gold that was owned by a country. And that was called the gold standard. But as we become much more, I suppose, aware of quantitative easing, printing money to get out of sovereign debt, big companies go bust, individuals go bust, and countries can go bust. So one of the ways they avoid that is by, being able to print money at their own political discretion rather than as a multiple of the gold bullion they have in storage. So that gold standard is gone. So now all currencies are really at the mercy of opinion. There's no real value in the notes and coins in circulation anymore. And that's what we mean by fiat currency, just not backed by anything. So just a point of education, Chris, if anybody's heard that term and didn't know what it meant. But, that's the reason why gold used to be inextricably linked with the value of the dollar and the value of the pound, and now it isn't.
1971, I believe, President Nixon, who was responsible for that.
Well, that's certainly true in the US, but there you go. But that's fundamental, right? So
yeah. So you mentioned earlier about feedback from our listeners, Kevin. So we're really open to any other alternative investments, anything within the investment pillar that you're interested in. Then the Facebook group at WealthBuilders on Facebook is a good place, and we had a good conversation actually around the topic of gold just before this interview, and obviously we heard some of those members' questions that I put forward to Giles. So I've enjoyed that, Kevin. It's good to understand that. Gold
just a bit more, Chris, actually. I remember doing a 15, 20-minute presentation on the subject of holding gold in your SSAS on a conference which was in July of this year. It was called the SSAS Alliance Conference, which if anybody goes to sasalliance.org, so SSAS alliance.org, you can see there's a conference coming up in November where we're focusing not on gold and other assets, but just on property. So if you're interested in property as an asset and pension as an asset, and you want to see how pensions and property can go together, there's a free to attend, basically it's a whole day conference, so you can tune in when you want to, and the recording of the whole day is available, so you've got the ability to watch at your leisure. You can tune into that at sasalliance.org, and you'll see on there a link to the property conference, which is on November the 12th. So that's just an interesting thing. So gets, again, some free education, some free information to work out whether property is right for you or whether a SSAS might be right for you.
I'll link to that in today's show notes. Also, Giles did supply a prospectus. So anyone who wants to download that, just hit on the show notes and you can have a look through that from Sharps Pixley as well.
There you go.
I enjoyed it. Thanks, Kevin.
Yeah, where are we going next, Chris? We've got some interesting things on property to talk about in the next podcast, I believe. So we'll dive back into property. But up until next time, Chris, I'll see you.
We hope you enjoyed today's episode. Don't forget that we are constantly updating our resources inside the WealthBuilders membership site to help you create, build, and protect your wealth. Head over to wealthbuilders.co.uk/membership right now for free access. That's wealthbuilders.co.uk/membership.